One, two, one, two. One, two. Okay, there we go. Good morning, everybody. Sorry, I was actually analyzing the markets off stream. Realized, wait, I should just be doing this on stream. So I will show you what I've done so far. It's currently about 9 o'clock. From DXY, let me start there because there was a big news event yesterday, which I should, in fact, show. It was around 7 p.m. 7 p.m. I wasn't available. No chance. From 7 to 9 p.m., I will not be with my phone. So I expected this to be good for the dollar because Trump is speaking. There's many statements and economic projections which I believed would have a positive impact on USD. And if you look at the expired, though, price action was telling me it's going down. Why was that? Well, simply because we're in a premium. We also have these zones that we're bullish to. But you can look at the line, like we're expecting price to come up here, then go down. But what's so interesting about this is that I stated that we're short-term bullish for the dollar, right? You can see the reasons for the bullishness and the reason for the bearishness. Bearishness is longer term reasons, so it should happen on the longer term. What does that mean? That means that overall, which means in the short term when we are trading, which is intraday, we may not be able to capitalize always on these sells if we are only to look for sells. Why? Because look at the reasons. Weekly bias. That's a weekly time frame. Multiple time frames, yes, but there were the 4 hour and above. We had a 4 hour market structure shift to bearishness. That's a 4 hour. What happens to a retracement? We took out swing term low, we displaced in doing so, which is basically describing the market structure shift. And then equal lows is a target. And as that is the case, there is also buy side up here. So we didn't reach the 4 hour order block for reversal, which is above this fair value gap, which we've just filled anyway. So the order block, this is the 4 hour fair value gap. So you can see from that candlestick to this candlestick. But if you just drag this up a little bit, you will see that that is the order block. Because the bullish candle that's offered to buy side before the sell-off, which has displacements within it. And what you notice, price wicks above it, to be fair, it's almost filled it. And then that's where some sells come into play. So the sells entered on a larger time frame basis. So that's why I drew this arrow up first, then down later. Now I was wrong about when it's going down. As you can see, it went up even higher. But if I took that bullishness, short-term bullishness seriously, I would have been able to, anticipate news might actually want to, push that further. Now, obviously, I can't predict news, especially when I'm not able to watch it, see it, or I don't even know what it's going to be. Like if federal funds was probably going to stay about 3.75, that's the only thing I predicted. Everything else is just statements, so they're very vague or less direct, and you kind of have to understand. So I wasn't able to really get into any of this concerning the dollar. So what's my current stance on it right now? In fact, let me quickly have a look at gold because I did give some gold advice earlier. I was saying that I'll be looking for sales. 1 second. Okay, so we've just had a break of this short-term low over here, which is marked by this green line. I expect the price to come up a little bit, go down, break this low, and if it displaces and taking out this short-term low, I'm looking for the retracement to enter my sell. Why? Well, let me show you on the larger time frame what's happened. So first of all, we can understand bearishness. Why? Because we had a market structure break to the downside. How was it a break? Well, we've taken out multiple short-term lows. We've displaced very strongly to the downside. We've retraced this 4 hour fair value gap because the daily one is just too wide, which is why I'm not using it. So this 4 hour one's a bit more streamlined over here. Obviously there's one above it, but we've from this fair value gap before, we've dropped off. We've come back to this area, swept these highs. Remember this high over here? We swept it. Cool. That's the first thing. We've had a 4 hour sweep. Then we scroll down. You can see this is the Asia kill zone from last night. This low got taken out. This high got taken out right here. You can see we traded above it. So we traded above this high, traded above this low. But the most recent one is when you see price sweep the low, sweep the high, you should expect a downward play and a strong one too. So that strength and a strong kind of move to the downside is what I'm expecting. So when I go to 1 minute, I decided to mark out this short-term low. So boom, boom, We broke this, and I was wanting it to be broken by displacement, which is exactly what we have right now. So now that if price comes back, but which it kind of has already, I'm willing to enter a sell. Now, depending on how it comes back, depends on how strong of a trade I enter. For example, it's coming back immediately, and what do we know? From this high to this low, to be fair, it's actually about equilibrium halfway on the fair value gap. So if it comes up here, it's valid. We'll set up over here. I'd like 2 or 3 pips for spread like this, and then we can target lows, especially London's low right here. So this would be a valid setup. Let me get that ready. Right. So why did I enter this sell? Let me break it down. So daily time frame, we can see the potential for sells, right? Let's get rid of the drawings. Why? Well, we've had a market shift to break to the downside. We've had a pullback within this range. We still haven't filled this fair value gap, which means that we haven't fully satisfied it. We've also shown a reaction to it. We've pulled back up to these highs, which is equal highs over here. How do we know it's equal highs? Because when we zoom in, you can see that these are equal highs. So when price comes up, it sweeps those equal highs within this fair value gap. Okay. And once that happens, what do we have? We have a reaction to it. Obviously, you can see that we're bullish in the sense that we're creating high highs, high lows, but we're looking at the market from a liquidity's point of view. Then when we zoom in even further, we see the Asia sessions lows being taken out and the Asia sessions high being taken out. What does that mean? That means we've had 2 areas of liquidity pools being taken in our favor. So what do we have here? We then have on the small time frame after we set the Asia kill zone high is that we have a displacement taking out some short-term lows over here. And in that, we then have formed an opinion of well, the short-term lows here have been taken out by a displacement. Price came up to that displacement. We're selling from that area. Now, it is a bit of an aggressive trade. We're not risking that much, in all fairness, because, like I said, it is basically the equilibrium we're selling from, and price can come up to anywhere in optimal trade. It might not even be going in this direction. But following the bullishness of the dollar, I think, if I'm not mistaken, the NZD kind of moves in tandem with the USD kind of bias. What is my entries out 5.7? Yo, that spread is insane. Okay, anyway. So we'll be targeting London lows. Well, because we've taken out Asia lows, we've taken out Asia highs. Now I'm expecting that displacement that we've just seen to fund the idea to reach in London's lows. I'd expect price to actually go further than this. And I would expect it to start aiming for this. This is a daily low. You can see right here, there's 2 lows right there, which is generally speaking a sign of equal lows. And yeah, we just into the trade. I think we are allowing liquidity to become more of a basis of our trading style, because I think earlier I was just trading the style, the entry model, the pattern, rather than actual looking at liquidity. So I'm looking at liquidity a lot more. If I don't see liquidity being taken and a key area of liquidity being taken, and I still see my strategy, I want to stray from just trading without liquidity being on my side. Liquidity is what gives us fuel. We study this, is what gives us fuel for the ideas. And so when I'm targeting these large risk-reward ratios in my setups, I would need, some form of liquidity to fuel it in theory. So this is why I've entered this trade. I'm also looking at buyers of GU. The only concern, well, to be fair, it would have hit stop loss anyway. The only concern I had was that we didn't really cleanly close above this. Like we closed above it, but not by much. But I was waiting for price to come back down here, and then I was going to look at buying. As you can see, price just didn't want to go. And this is plausible because remember, we have to look at the grand scheme of things. We are very bearish right now. So yes, we swept the highs, and yes, we've swept the lows, but we needed a strong displacement for us to even consider buys. And then, of course, we would have had to look at the bias. Right now, the bias is super bearish. I don't know if today is going to be the day it has a retracement. I think that may happen another day. But generally speaking, I like to avoid entering specific trades where the move is so strong. Like, don't get me wrong, like there's a big displacement here, and this is one of the trades we're looking at. For example, we're looking at price to come back up to one of these levels and then potentially sell off from it. Right, it will be targeting Asia lows, for example. But the difference between this big move is that it's not big. It's not like a abnormal anomaly sized move, because when you have GU, we have an abnormal anomaly sized move, because in comparison to where we're at right now, price moved vigorously. With AD NZD, is that the one I'm in? Yeah, this is the one I'm in. There's no like abnormal move. This is just the whole pair is moving as it should, as it has. With NZD CAD, however, why I'm also more interested in this is because it had an abnormal move, but that was on Wednesday. And even so, it happened both ways: bearish, bullish, bearish. Big move, big move. So even if it pulls back, I'm expecting it to continue going down. Now with this, we want to see this go down quite quickly because we did enter on the 1 minute. But I think the best thing to do will just be to send alert. Let's see it create a lower low. That's what we're looking for. We have to just trust our stop loss. If it goes to our stop loss, that's it. I mean, we've lost the money. If it goes up any higher than this, I don't want to be a part of the sell. And we're wrong, which is fine. But with the whole bias of the daily shift that we've had and the sweeping of the liquidity we've just had as well, I'm looking to be targeting these kind of lows right here. Okay. Right. So I'm going to keep it quite simple. I think I want to be reviewing. I've introduced liquidity again. So you can see here we swept the Asia highs. Asia lows have also been swept. You'll need a quite strong displacement for us to even be considering buys here. This is similar to, it's just been a big move yesterday. It's such a big move that I'm a bit scared to kind of enter. So I'm going to keep this stream short. I'm going to do some work behind the scenes. And this is the only trade I've entered, which actually doesn't even look like it's going well. We'll see though. And then from there, we'll just monitor the markets whilst also just putting in some extra studies. Not good. Probably would want this to close fully below. And then go for this kind of bullish push up. Well, yeah, I'm going to keep the stream short today just because I've got a lot to do and I still have to travel again. So, yeah. The best thing to do in this instance, close the trade, just like that. And there you go. Your emotions are handled where they should be. So I'm going to let that run. If it hits my stop loss, hits my stop loss. We're going to study some more. And then we'll just go again tomorrow. But today is going to be a bit of a slower day just because I'm going to be out and about. But again, I'm grateful to every single person for tuning in. This is day 98, 2 more days. By next week, Monday, we will be on day 100, which will be an amazing feat. 10% of the way there. And thank you guys for tuning in. Yesterday, if you want to see some study sessions, yesterday's stream is quite good. There is news for Swiss franc in now, no? was a press conference. And some GBP news, which we should expect to stay the same around midday, and then some medium impact news for USD around 1:30. So yeah, I'll see you guys tomorrow. Peace.